That's how capitalism works. And it shows you deaths are not just passive vehicles. Capital markets means companies that are executing properly will get capital.
Hello, everyone, and welcome back to the Crypto Playbook. We're here today to talk about digital asset treasury. I'm Jeff John Roberts.
And I'm Leo Schwartz.
These things are hot. What exactly are we talking about here, Leo? What's a DAT?
A digital asset treasury company is basically just a publicly traded company that's sole purpose is to accumulate crypto. Michael Saylor, who's a Bitcoin evangelist, first pioneered the practice back in 2020 when he took his software firm Microstrategy, started buying up Bitcoin, now holds a huge percentage of the world's Bitcoin. Recently, different companies basically realized that they could do a similar strategy around different types of assets. So from Ethereum to Solana to even Dogecoin and WorldCoin, which is the famous cryptocurrency that's part of the startup that uses an orb to scan your eyes, founded by Sam Altman. So basically, we've seen this huge rise in companies that are being spun up just to buy large gobs of cryptocurrency.
Yeah, and if I understand the model, what you do is, obviously, Michael Saylor's formerly Microstrategy, now Strategy, pioneered this, but now you've got, companies that were, I don't know, maybe I take my failing printer business and then I suddenly, do a reverse merger with someone and get a bunch of capital and we go out and buy a bunch of Bitcoin or Ethereum. And then I take my company and sell shares of it to you. But which raises for me the obvious question of why don't people just go out and buy Ethereum and Bitcoin directly?
So I would say each different company has a different argument for why it makes sense to do. I mean, with Bitcoin and Ethereum, it's a little more difficult. The guest that we're having today, Tom Lee, has spun up one around Ethereum. And there's an interesting argument, which is basically that a hallmark of Ethereum is that you're basically able to stake it as part of its consensus mechanism for how transactions are managed on the blockchain and earn a yield on it. So basically the idea is that with this publicly traded company, they can also stake and earn yield and you can share in those profits. And maybe it's a cleaner, better way to have a publicly traded stock that has exposure to that upside. For other ones, for smaller cryptocurrencies, there's arguments that there's no real easy way to accumulate those cryptocurrencies if you don't want to open a Coinbase account or if you are beholden to certain requirements from your investors, like if you're a hedge fund or another type of wealth manager. Now you have this very easy vehicle that's traded on the NASDAQ that you can buy up in your portfolio and hold like any other stock. But there's also definitely an argument that this is creating a bubble. Like you said, there's no real reason that these have an actual advantage over just buying the cryptocurrency itself, that they won't be able to maintain that premium price over their underlying assets, and that basically they might fail because investors realize there's no real point to them.
Yeah, I confess I'm still skeptical. What you said too about, if in the case of staking, maybe it could be a cleaner way. If the company was run very efficiently, it might be sort of a cleaner way than having to, just having like stock and getting my yield in the form of a dividend. Maybe I can sort of see it if I squint. But, also the other reality is, there's now like hundreds of these things, right? And, someone told me, I won't say who, but a crypto billionaire, this is going to end in tears. What do you think?
Crypto, I think, is known for its boom and bust cycle and for its tulip-like crazes around different new types of assets or blockchains or tokens. I think there's a strong argument that many of these will not succeed, but maybe a few of them will. And that's why we're having one of the premier CEOs or chairman of one of these companies in Tom Lee, who's a longtime analyst, longtime figure in the crypto space. His digital asset treasury company, Bitmain, is certainly one of the most prominent ones after Michael Saylor's strategy. So I think he'll be able to really explain what the purpose of these are and where it's headed and which ones might fail.
Yeah, and I think Tom's got enough credibility in the space if he's going to kind of put his name on something like this. There's, presumably something there. And likewise, Pantera, they're, pushing towards a Solana DAT, with the goal, I think, in part of, helping to build up this Solana ecosystem. So, the same billionaire who told me is going to end in tears also, carved out an exception and said there, will be a flagship DAT for each cryptocurrency. Obviously, Michael Saylor's strategy's got Bitcoin, but there's also Ethereum, Solana, and a few other ones. And so, as crypto gets bigger, maybe there are, I still see it as a weird bank shot. I don't see any appeal to this for retail investor, but it's a thing. And I guess we'll find out more. I'm really looking forward to your conversation with Tom.
Thanks. Yeah, let's turn to Tom.
Tom, it's great to chat with you today. Thanks so much for joining us for this episode of the Crypto Playbook, all about digital asset treasury companies.
Thanks for having me.
I'm excited to talk with you about this because I think in an industry that's dominated by buzzwords and new trends, digital asset treasury companies or DATs have probably been the biggest one over the past few months. I mean, it seems like longer. I know that you started with yours only in June, which isn't too long ago. So I'm excited to hear about how you view this space, where you think it's headed. But maybe just to start off, if you could just give a background of your own journey into crypto. I know that you're a longtime analyst, but how did you first stumble on this very weird sector of the finance industry?
I first heard about Bitcoin when I was the chief strategist at JP Morgan. So maybe 2012, around that period of time. And in our macro calls, our FX head had talked about how they thought Bitcoin could be viewed as digital money. And so over time, it's something that we should pay attention to. But he said that it was primarily used by drug dealers and ransomware. And so I didn't pay much attention. I think Bitcoin might have been a $10 billion network value at that time. And I left JP Morgan in 2014, started my own research company called Fundstrat. And in 2017, I saw Bitcoin's price cross the screen, and had risen by 10 times. So and reached about $100 billion of value. And I have not ever seen anything rise to 100 billion that ended up being something that was just a flashing moment. So our team then spent a few months trying to figure out how does one explain Bitcoin going to almost $1,000 in a few years, and we found that and first of all, it was very hard to find any written commentary about Bitcoin, but we found data on the blockchain that Bitcoin's rise was largely explained by the number of users and the activity per user. We actually published a white paper that year saying that not only did Bitcoin's rise make a lot of sense using network value concepts, but that we thought it could rise to another 25,000 by 2022, which was a 25x basically from there. And the piece was very controversial. We actually lost some research clients because they said, "How could you be writing about something that's basically magic money and a scam?" But as you know, in that 5-year period, Bitcoin went to 25,000. And so over the last 8.5, almost 9 years, we've at Fundstrat have been writing about Bitcoin as we think a legitimate asset class. And I think really in the last couple of years, Bitcoin has become accepted as digital gold.
So obviously you've carved out a name for yourself as one of the more prescient analysts who's understood where crypto is headed. So I think a lot of people pay attention to your prognosis on new tools or assets that are coming to the space. And I mean, digital asset treasury companies are chief among that. How have you viewed it? I mean, MicroStrategy, obviously, Michael Saylor's publicly listed company that became famous over the past 5 years for accumulating Bitcoin, was really the progenitor in this trend. How have you viewed that company, and what made you decide to get into this space?
Okay, I guess I think it was two parts. And so with regarding MicroStrategy, uh, he made the pivot of his company, and it was a very bold pivot where MicroStrategy went from being a security company that was very mature and stable to one where he decided to hold Bitcoin as its primary treasury asset and basically redirect the company's future on using cash flows and other markets to grow Bitcoin. That was a big move in August 2020. we were watching that with a lot of interest, and actually, at Fundstrat, we were highlighting Michael Saylor and his efforts because that to us also represented the only way for many institutional investors to get direct access to Bitcoin. Um, and it's been a runaway success for him because, he had maybe in the first few months about $13 of his stock price was $13 and maybe $1 of Bitcoin per share. Today, Microstrategy stock is now 330, so up close to a 27 times increase, and his Bitcoin held per share is now around 227. So he has successfully grown the stock price because he's grown the Bitcoin held per share. So I think it's been a true success story. And now he's one of the largest holders of Bitcoin in the world with nearly 3%. Uh, Fast forward to 2025, you know, I've been a big advocate of Bitcoin for many years, for almost a decade, and it was really around that digital gold narrative. But in 2025, a few things had come into place that made me quite interested in thinking that uh, crypto was about to break more into the mainstream. And a few of the pieces, and not in a specific order, was number one, the regulatory environment had gone through a sea change because for the prior administration, crypto was under siege. And I think there was enormous regulatory risk. In fact, several banks were essentially ended their existence because their involvement with crypto. And in this new administration, it's proven to be very crypto friendly. The second is that projects that are native to crypto have now broken out into the mainstream as runaway successes that have caught the attention of Wall Street. The first of these, and maybe the most important, has been stablecoins. And that's why we called it the Chat GPT moment, that stablecoins have proven to be a pretty attractive payment method for consumers, especially because it offers finality and low cost, and has really grown. And the Circle IPO caught the attention of Wall Street as well. So to me, that was the first moment. And when I looked at what this meant, it became pretty clear to me that this was actually a very bullish pivot for Ethereum, because Ethereum is the largest smart contract platform, uh, also the only smart contract blockchain with 100% uptime. There's never been an outage in the Ethereum network, which is a huge deal and a huge accomplishment for a decentralized blockchain. So we did a lot of work on this and realized that this is very similar to Bitcoin in 2017. It's about to become burst into the mainstream and institutionally relevant, and therefore I thought to capitalize on potential exponential move in Ethereum, it would make sense to create a crypto treasury vehicle. And that's what I did by partnering with Mosaics. We approached Bitmain and led that transformation from being a small company with an operation in mining to one where Bitmain's sole focus, or primary focus, not sole focus, would be to create Ethereum as its treasury asset.
So let's talk about Ethereum first before maybe diving into the DAT strategy. Uh, Ethereum has had obviously its ups and downs over the years. When the merge happened in 2022, or the change from a proof of work system to a proof of stake, a lot of people thought that it could maybe even overtake Bitcoin as the most popular blockchain. But it's been more hampered over the past couple of years by the rise of other blockchains, by criticism over slow processing times and expensive fees. I know that you've called Ethereum, the blockchain of Wall Street. Obviously, there's a lot of stablecoin activity happening on it. What makes you bullish on the future of the chain?
Uh, well, I think Ethereum has a very large and well-established development community that I think, there has been a lot of changes to Ethereum in the last few years. And maybe also the community and the foundation hadn't been focused on and creating necessarily Wall Street friendly innovations and products. I think that had changed this year, and part of it has probably been the fact that one of the biggest sort of consumers of ETH gas has been stablecoins. But it's really the Ethereum Foundation really gained some new leadership that has really directed itself and said that let's make ETH friendly to what would be attractive to Wall Street. So I think that there has been a real change, and it was evident to me at Token 2049 that developers and the Ethereum Foundation really care about building and making upgrades that make Ethereum friendly for Wall Street. It is the biggest blockchain. I mean, at the end of the day, um, when you look at how these layer ones capture value, and again, Ethereum is very clever because it has layer twos, but the layer ones capture value because as more assets are uh, created or tokenized on a blockchain, a portion of that value accrues to the blockchain. I mean, that's just what we've seen. Like the floor for Ethereum has been the value of the real world asset. So it makes sense to me that if Ethereum is where most stablecoin creations are taking place, and it is the majority, more than 60%, and if you look at incrementally, it's growing actually, then Ethereum is going to benefit from that exponential growth in stablecoin demand. But of course, that's just the front end. There's a lot of other things that will get tokenized. I mean, a stablecoin is just a tokenized dollar. And once you tokenize that base layer of money, it's going to make sense to tokenize other things on the same chain that you tokenize the dollar on.
Although, of course, this being crypto, I think what a lot of people care about also is what the dollar value of a crypto asset is. And I think there's been frustration that as Bitcoin has soared well past what its all-time high from 2022 was, Ethereum was staying pretty low compared to its high in 22 until recently. And I think a lot of people can attribute that to your own digital asset treasury company, to Bitmain, and this success of sort of reinvigorating the chain. I mean, how important do you think it is to really up the value of Ethereum and the role of digital asset treasury companies in doing that?
Well, I mean, I think there's just going to be questions of causality. I would argue Ethereum has done well this year, and it is outperforming Bitcoin. And as you know, it has made an all-time high. Ethereum is outperforming Bitcoin year to date, and that's not just because of the rise of Ethereum treasuries. I think that's what many people would like to conveniently say, but there's been a lot of Bitcoin treasuries this year. Um, a lot more actually capital raised around Bitcoin treasuries than there is Ethereum. I think that Ethereum is more relevant to what's happening. Tokenization is a real thing. Wall Street is building projects. Swift announced that they're experimenting with Linea to do, basically rebuild Swift on the blockchain. This is not vaporware made up by companies. These are real projects that are taking place, and it's being built on Ethereum. I would say that explains more the rise than Ethereum treasuries. And the second thing that has really broken out into the mainstream is prediction markets, and prediction markets run, a lot of them have their own ERC20 token, which means they're running on Ethereum. So I would say, again, is people look at the future of crypto and the idea of tokenization and prediction markets and how that's transforming traditional markets. That's a story around smart contracts and Ethereum, and that's why Ethereum is doing better. I don't think it's just because of Ethereum treasuries. And to give you a proof of that, there's plenty of other crypto treasuries out there. There's Solana DATs. It's not helping Solana outperform. There's hyperliquid DATs. I think the story around Ethereum has a lot to do with the fact that there's a lot happening on Ethereum.
And now through the DATs, there's a different way for investors who do buy that bull case around Ethereum to get into it. But I think there's still confusion, especially around folks outside of the crypto world, of what real utility a digital asset treasury company adds to investors, especially for an asset like Bitcoin or Ethereum, where you can just pretty easily go on Coinbase, or even now you can go on Fidelity or brokerage and buy an ETF. So what is that argument for why it makes sense to also have this now third type of vehicle to get exposure to these cryptocurrencies?
Yeah, I mean, I think that's fair. I think someone at first glance can look at this and say, "Oh, I could buy an ETF. Why do I want to buy that?" And by the way, that cursory observation probably mostly holds true because a lot of crypto treasury DATs trade below the holding of their crypto. So, I mean, to your point, they've not been creators of shareholder value. Um, I think that that is showing you that that's how capitalism works. And it shows you debts are not just passive vehicles. Um, Capital markets means companies that are executing properly uh, will get capital and be supported by investors. Just to give you some high level numbers, MicroStrategy and Bitmain, which are the two largest crypto treasuries, both trade several billion dollars of trading volume a day. In fact, Bitmain is the 26th most liquid stock in America today. And the two companies combined are 86% of all trading volume for the DATs. So of the 200 plus DATs out there, most only trade by appointment, quote unquote. So they're maybe even less liquid than an ETF. But in Bitmain's case, it's not just a DAT. We're the largest holder of Ethereum in the world. Um, Almost 2.9 million tokens. Okay. And that totals over $12 billion worth of Ethereum. What does that mean? Well, one, uh, we are providing a huge amount of security because that's almost 2.5% of the Ethereum network. So when we start staking, we are the security provider for Ethereum with permanently held ETH. I mean, that is the most secure staking entity out there, right? Because we're not a fund with LPs that will redeem. And because of that, the Ethereum community has actually viewed Bitmain as an important implementer of like what Ethereum cares about. So we're in dialogue with the Ethereum Foundation and with a lot of core developers, and they want us involved in a lot of their DeFi projects. And we could even provide standby liquidity to the ETFs out there who've asked us to consider that as a role because they want to stake ETH, but they have liquidity requirements. So we play a role there. On the flip side, we are the institutional road on ramp for people to own Ethereum. Because as you know, if you look at the institutional equities out there, we're the only large cap way to get direct exposure to Ethereum as a factor bet. In fact, Bitmain, I think, is like the 480th largest company in America today on market cap. So that means we will almost certainly be included in the Russell 1000 index at rebalance. So every fund has to now decide, do they want to have a factor bet on Ethereum? Because of that role we have, we're essentially a liaison between how Wall Street views future upgrades to Ethereum to the community. And that's the role we're playing. So we're not just a DAT, we're becoming, one of the important voices within Ethereum. And that's really was our goal. That's why when Bitmain was created, our target was 5% of Ethereum, because that is the power law at work. We would be playing a benevolent role. And that was part of our original presentation, that we would play a role in the DeFi community, and we would also do moonshots, which were selective investments in projects that would strengthen Ethereum. And I think that's why the market maybe is recognizing that with the trading volume.
Yeah, so I think Bitmine and obviously Strategy have been able to buck the trend that a lot of other digital asset treasury companies have suffered in terms of their price, especially relative to the net asset value of the holdings that they have. But do you worry that a broader bubble in the DAT space could negatively impact Bitmine if you see that bubble burst at all?
Oh, that's a great question. Maybe in some measurement ways, the bubble has burst anyways, don't you? I mean, if I don't have the numbers in front of me, but my guess is 80% of the DATs are trading below net asset value now. So if that's not already a bubble burst, in the sense that what how would that bubble burst? Because, like a crypto treasury shouldn't trade below NAV unless it was captively held crypto. Because, if you're a crypto treasury and you're trading below NAV, you can take action to restore your valuation. You can convert to an ETF. Um, you could return all the crypto, so sell it and return cash, and people would come out ahead. So I think that, like, I'm not even sure I want to use the word bubble burst, but, like, I would say, is the market becoming discerning? I think it already has.
So last question, and I know that you're famous for your predictions, but what's next for Ethereum? What do you see on the roadmap for the rest of the year? And then what's next for Bitmain?
I think, and we covered this in our last corporate presentation. If we go back to 1971, when the dollar became synthetic, because that was the year the dollar was no longer convertible into gold, so it became a truly synthetic instrument. Okay, um, then we can look at how the world forked. The first was gold, and people bought gold, and gold performed well and became, today a $21 trillion asset class. But the second thing that happened was that the question became, if dollar is synthetic, do we have to use dollars? Can we use Deutsche marks or francs or yen or pounds, right? The pound could have come back. But Wall Street stepped in and said, let's innovate and create US products to make sure people use dollars. And the dollar became hugely successful. It's only 27% of GDP, but it's 53% of central bank reserves. And it's 84% of all financial market quoted pair trades. Okay, so the real play when the dollar became synthetic was Wall Street created a 100 plus trillion dollar market for dollar assets. So looking back, Wall Street was the big play in 1971, not gold, because gold is capped at 20 trillion. As we think about 2025, and now we're tokenizing not just dollars, but stocks and real estate and bonds, people may correctly say, I want to own digital gold, but gold's a $21 trillion market. The tokenization of everything else, as Kathy Woods has pointed out, is in the quadrillions, especially as AI moves towards micropayments, which need to happen on the blockchain. That to me is a bigger opportunity. And that's why in Ethereum is where a lot of this is going to be built. So to me, Ethereum should have a network ratio to Bitcoin that matches its old high, which was in 2021. That would be $21,000 per ETH token. But if its network value flips Bitcoin, which we believe is likely, and Bitcoin gets to those 200,000 levels that we expect, then it's around 60,000 per ETH token. So to me, there's still an exponential opportunity in owning ETH over Bitcoin.
And just for listeners at home, it's currently around $4,400. So that would be a massive increase.
Yes.
Yeah. Well, Tom, thanks so much for joining us today. This was really helpful, I think, to understand this often mysterious and esoteric data space. So I appreciate you coming on.
Yep. Thanks. Good talking to you.
Okay, Leo, well, that sounded like an enlightening interview with Tom. Tell me, though, was there anything that really surprised you about what you said?
Yeah, I think what was surprising was, even for Tom, who's one of the biggest names in the digital asset treasury boom after only Michael Saylor, I mean, he's skeptical that this is a bubble and it might have already burst. If you look at the net asset value holdings for a lot of the other DATs out there, they're not doing too hot. It really is only Strategy and Bitmain that are continuing to lead the charge.
Yeah, I mean, that's what I'm curious about, too. And everyone I talk to all agrees that this is a bubble right now, but no one agrees on who exactly is going to get washed away. But I do think there are some blue chips in there and probably a whole lot of stuff that's not going to be here at all in 2 years. So.
Yeah, I mean, the other interesting point here is obviously he's focused on Ethereum, where Michael Saylor is focused on Bitcoin. I think Bitcoin has really won out and will continue to win out as the largest cryptocurrency and the one with the most lasting power. But Tom did make a case for why Ethereum can still be the blockchain of Wall Street. And it'll be curious to see if that actually happens and if this rising tide of tokenization will happen on Ethereum. And I mean, Jeff, I know that you've been a supporter, or at least advocate for Ethereum for a while. Do you see calmer waters ahead?
Well, I don't know if I'd say I'm Ethereum, but I mean, I do think it's the real thing and that there's a vibrant community of developers. I did think they got off track a bit. I think Ethereum builds for other Ethereum people too much without having sort of a commercial, pragmatic focus. But it seems Vitalik's given them a bit of a kick in the pants, and it will sort of eventually become what's supposed to be. But just to wrap up, like sort of, I guess we can do kind of a lightning round here, Leo. In terms of DATs that are going to be out there, I think Ethereum's definitely going to be one of those around. But I'm more interested in the sort of far-flung ones. Solana doesn't seem crazy to me, but what about an XRP DAT?
Yeah, I guess the question is always, is there a reason to actually hold these in the form of a publicly traded equity as opposed to an ETF or just buying it on an exchange? I think Tom made a convincing point for Ethereum. Strategy has obviously already made itself a mainstay for a lot of institutional investors, but whether Solana or XRP or some of these more third rate altcoins can actually make a case as a DAT still remains to be seen.
Yeah, I think there'll be funds that provide exposure to broader range of alts, but yeah, there's got to be a cutoff somewhere. Like Cardano. Does the world need a Cardano DAT? But that's a question for another episode. We are out of time. I'd like to thank everyone for listening. That's a wrap of Crypto Playbook. I'm Jeff John Roberts.
And I'm Leo Schwartz. See you next time.